Oh, my pleasure. Thanks for having me on again.
Well, hey, Peter, the biggest news story of the day right now is what's going on in Syria and North Korea. You had predicted in your books and many times in your commentary that war would definitely be in the cards here, just as a matter of necessity because of what's going on to cover up the disastrous economy and what's really going on in the fundamentals. Do you think World War III is on the horizon?
Well, I don't know about World War III, although it certainly could happen at some point. But I think the fact that Donald Trump is already, dropping bombs on Syria within the first 100 days of being president shows that anybody who believes that Donald Trump was going to usher in an era of a new non-interventionist foreign policy better do some rethinking because he seems to have fallen into line very quickly with the patterns established by traditional Republicans and Democrats, to drop bombs first and, ask questions later. And it's even possible that the Trump administration decided to do this to take some of the political heat off Trump and to kind of rally the country around this new war effort. Whenever, we start dropping bombs on somebody, nobody wants to be critical because nobody wants to be accused of not being a patriot. So everybody kind of rallies around the commander-in-chief whenever there's some kind of military intervention. And in fact, Donald Trump has already drawn a lot of praise from his critics because now he's acting presidential, right? Because he's bombing people.
Are you surprised how the media has acted? I mean, first of all, they've been in a hysteria over him for the last 6 months, maybe last year and a half. But man, he started dropping bombs on Syria. And you've got, I forgot what that CNN guy he was telling that this is the first day Trump's been president. They're going crazy. They love it.
CNN loves that because it's good ratings, bombs. I mean, CNN was built on the Gulf War. I mean, that's where CNN, basically came to be what it is today. I mean, it was out before the Gulf War, but that's when it really rose to prominence was that, 24-hour coverage of what was going on in Kuwait and Iraq. And so, yeah, they love this stuff. But, Donald Trump should already be disappointing a lot of people who thought we were going to get change. We were going to make America great again. We didn't repeal Obamacare. That's here to stay. Major tax reform is dead. We're dropping bombs. I mean, it's the same old, right? Big government, bigger deficits, more cheap money, more, keep the air in the bubble. We're headed for a major, major crisis.
Peter, with the debt ceiling being maxed out on March 15th, I haven't even seen it play out in the media at all. Do you think that everyone kind of assumes that it's going to be easy to extend it, much like repeal and replace Obamacare was supposed to be with a Republican Congress?
Well, I think it'll be much easier to get the debt limit raised because I'm sure the president will be able to get Democrat support for more debt. So there might be some conservative opposition to it, but there'll be plenty of Democrats that will join on with most Republicans. So I don't think, the crisis is not the debt ceiling. The crisis is the debt. I mean, if the ceiling were just permanent, that would help mitigate the crisis. But no, I mean, they keep raising the ceiling every time we hit it. And so the debt gets bigger and bigger and bigger. And the only thing that's going to bring it back down is going to be a currency crisis, which, is in our future.
Looking at the Fed hikes, gold has done very well. From hike to hike, it just keeps going up, and it looks like we're going to have another hike, and gold's rallying today.
Well, I don't know about another hike. We'll see. But gold's up now 10% so far in 2017. And, the Dow Jones is only up 4% this year. The Dow gets all the headlines, but gold is getting all the performance. And, I think the Dow is going to finish the year negative. I think that we're going to have a pretty weak second half as a lot of the Trump mania catches up to reality because we had this huge run up in the stock market based on the higher GDP growth that we were going to get from repealing Obamacare and reforming the tax code. And since those things are not going to happen, we're not going to get the strong economic growth. We're not going to get the boost to corporate earnings. In fact, a first quarter GDP, the estimate now from the Atlanta Fed is just 0.6%. Which would be the weakest quarter in many years if that were the case. And in fact, the Atlanta Fed was projecting 3.4% GDP growth for Q1 as late as February 1st. So we've had a rapid deterioration in the economic growth outlook. There is no fiscal help on the horizon. So this stock market rally should fizzle. And so should the rally that we had in the dollar. And that will be very bullish for gold. And in fact, gold stocks still have a long way to go. I was just looking, even though gold is at a new high for the year, the GDX would have to rise 7% to get back to its February high, and the GDXJ, the junior gold mining stock index, would have to rise 16% from here just to get back to where it was in February, even though the price of gold today is higher than it was back then. So we had a very, very big correction in the gold stocks, even though we've had no correction really in the price of gold because it's on the highs.
That's interesting because it's almost like I don't want to say hidden bull market, but it's a bull market that many people aren't fully embracing, and it could be because of the bear market that we had, especially in the shares over the last 5 years up until about late 2015. Is that typically normal in an early stage of a bull market, whether it's the shares or physical gold you're talking about? Because a lot of people haven't fully embraced it yet, and they actually feel this little correction feels like they're back in 2014 again, but really things are very, very positive, right?
Yeah, well, bull markets climb a wall of worry, and that is exactly what's happening. Although with gold, it's kind of the opposite in that people who buy gold are worried about things, right? People are buying gold because they see problems on the horizon. And so in this gold bull market, what's actually happening is people are optimistic, and so they're not buying gold, right? A lot of the gold buyers are Trump voters, right? Most people who voted for Hillary Clinton probably don't buy gold. In fact, most people don't buy gold at all, but to the extent that people are buying gold, they're much more likely to be Republicans and have been Trump supporters. And so these individuals are as optimistic as they've been in a long time. I mean, you have to go back to the election of Ronald Reagan really to find this much optimism on the part of Republican voters. And, so they're not buying gold. People don't buy gold when they think everything is great. If they think Trump is going to make America great again and fix all the problems in the economy and the stock market's going to boom, then why do you want to own gold? So you have all of these enthusiastic Trump voters not buying gold because they're optimistic. Yet the price of gold keeps rising and rising and rising, and they're missing out, I think, on what is going to be an enormous gain. It's going to be a while before some of these Trump voters have to face reality.
Peter, I was going to ask you, when you invest in gold, do you completely separate the aspect of gold and then the mining shares? Because the mining shares, I mean, you could have the major companies or you could have the junior mining companies, which are extremely speculative. Do you even consider a junior mining share or a Barrick, for example, a large cap, as part of your gold portfolio? Or do you keep your physical precious metals separate from the side that owns stocks?
No, I mean, I'll look at it as exposure to gold. I mean, the least risky way to own it is, just to own gold. And that's kind of like your liquidity. That's, like money in the bank, except I think it's better because money in the bank, A, the bank could fail, and B, the money is definitely going to fail. So I'd much rather have gold. And, a great place to store your gold, at least a portion of it, is at Gold Money, which is the company that I'm dealing with where, you actually are able to monetize your gold because gold that you store in a vault through Gold Money can be used in commerce, can be used in e-commerce. You can buy things with it. You can spend it like cash, except it doesn't lose value between the time you deposit it and the time you spend it. And of course, you can even earn it. If you have a business, you can start accepting payments in gold, and you can start accumulating gold and earning gold instead of currency. But as far as gold stocks, they're more aggressive. I mean, obviously, a company like a Barrick Gold or Newmont, these big gold companies, they're going to go up if the price of gold goes up because they have the gold. And as prices go up, the impact on their profits is rather dramatic. So if you get a 20% increase in the price of gold, that does a lot more than increase the profits of a gold company by 20%. I mean, it could increase the profits of a gold company by 100%. So if your profits double, then, all else being equal, the price of the stock should double. So you get a tremendous amount of leverage to the price of gold when you own these gold mining companies without having to borrow any money. Because the other way you get the leverage in gold is to, borrow money to buy it. People do that in futures contracts or they use options. So I think gold stocks are a better way to lever to the price of gold than just going into debt. And then you mentioned these junior miners. I mean, those things potentially have the most leverage of all. Of course, they have the most risk if the price of gold doesn't rise. But if you get a significant increase in the price of gold, these things could go up, 10 times, 20 times. I mean, if you buy the right one. But of course, you want to diversify. When you're buying the exploration companies, junior mining companies, the key is to have a portfolio. Don't just put all your eggs in one basket and hope that you found the right one. You got to spread it around. And I like funds, that do that. I mean, we have a fund, the Euro Pacific Capital Gold Fund. EPGFX is a symbol for my gold fund. So I think, we have a lot of junior miners in our fund. I think when you're trying to buy the juniors, it's just best to buy a fund rather than trying to pick the individual winners yourself. You want to diversify your holdings. Don't just put all your eggs in one basket and hope that you chose the right basket. So just pick a fund. In my fund, the Euro Pacific Gold Fund, EPGFX, is managed by Adrian Day. Adrian's been managing in this space for over 30 years, operating in the gold mining sectors, with a lot of work in the junior miners. And so rather than doing the work yourself, just hire Adrian Day to do it for you. He's got a great track record. That's why I hired him to manage my fund. Even I don't necessarily trust myself in this space. It's a very, very difficult space to understand. There are so many ways to screw up. There are so many landmines, right, literally masquerading as gold mines. So you need a guy like Adrian who really, eats and sleeps and lives this sector and who's been doing it exclusively to be your guy. In our fund, I think we were the number one gold fund last year. I mean, technically, there was one gold fund that beat us, but the guy that beat us has two funds last year, and one was like horrible. So if you average his two funds, we kicked his butt. So, we did great. And I think Adrian is going to do fantastic. That's why I hired him to manage my fund. And so, you can hire him yourself. All you have to do is buy the fund. EPGFX is the symbol. Check it out. Read the prospectus. Understand the risks. Of course, investing in gold stocks is risky. If the price of gold goes down, the price of gold stocks will go down even more. So make sure you understand that before you invest.
Sure. The symbol EPGFX. We'll definitely have that up for everybody. And certainly having Adrian Day manage your gold stock portfolio is a much better idea than just buying a random junior mining stock. Because I can tell you, just being in the industry, that it's, my goodness, I would say the scams outweigh the good guys by 9 to 10.
And this is where, too, index investing is not the way to go. I mean, this is where doing your homework and being smart can add tremendous value over time, right? It's, just having a guy understand the companies and being able to avoid the landmines, right, and just be in the gold mines. It's well worth the small management fee that you're paying to have somebody really separating the wheat from the chaff.
Peter, before we close out, I wanted to ask you about the U.S. dollar. We've seen China and Russia make big moves, and this is not new. This has been going on for a long time. What is the state of the U.S. currency? Is it still going to be the reserve currency 10 years from now?
Well, who knows? I mean, 10 years from now, maybe not. We'll see. If you asked me that question 10 years ago, I wouldn't have said, I would have had kind of the same answer. And it still is. But, where the dollar is living on borrowed time, literally. And so we just don't know. It's like a bomb with a fuse, but we just don't really know how long the fuse is. But the dollar, I think, is in a major bubble. I think it is in the process of topping out. I think once it completes this top, it's going down. And I think it's going to take out the lows from 2008. In 2008, the dollar index got down to 70 approximately. That was the record low. Prior to that, the record low on the dollar index was about 80. And so I think we're going to take out the low of 70. I think it'll happen in the first term of Trump. I mean, assuming there is a second term, which is a stretch. There may not be. It may only have one term. And during that term, I think the dollar is going to hit a new record low in the dollar index. I think the U.S. economy is going into recession. I think the Fed is going to take back the minimal rate hikes. I think we're going to go back to QE. I think the balance sheet's going to explode. I think we have a lot of other problems that are going to blow up, early in the Trump presidency. And that's going to drive the dollar down. The difference between this dollar sell-off and the last one is I don't think it's going to be saved by the bell. I think it's going to go down for the count because the last time what saved the dollar was the financial crisis. And that crisis resulted in everybody buying the dollar. But I think the next crisis is not going to be the same type of crisis that we had in 2008. I think the dollar is going to be the crisis. I don't think it's going to be a bread and butter financial crisis. This is going to be a currency crisis. So it's going to be the U.S. government. It's not going to be the mortgage market that's blowing up. It's going to be the treasury bond market that's blowing up. It's going to be the Federal Reserve that's blowing up. And this is going to be a major, major negative for the dollar, not a positive.
Peter, do you think Trump, when he, was with his Treasury Secretary and certainly in the past few months, could have quite possibly learned that, all these things he said on the campaign trail about calling China a currency manipulator or going toe-to-toe and having some sort of trade war with some of these countries. Do you think he could have learned that, hey, Saudi Arabia is helping keeping the U.S. dollar propped up. China's helping keeping the U.S. dollar propped up, that perhaps maybe they're allowed to do some of these things because it's us simply reimbursing them for helping us keep our currency propped up?
Well, I don't know what Trump's advisors understand. I mean, we have a huge imbalance of trade. We have a huge deficit. That is a major problem in the long run. In the short run, it is a panacea. In the short run, we benefit from the trade deficit because we get to consume more than we produce. We get to live beyond our means. The trade-off is that we're selling off our assets. We're going into debt in order to indulge our present. Foreigners give us the products that they make, and we give them stocks. We give them real estate. We give them bonds. But now they have assets. We have to pay interest. We have to pay dividends. We have to pay rent. So Americans are getting poorer as we, run these deficits, and our trading partners are getting richer. And so in the end, these chickens are coming home to roost. And yes, the sooner that we can address the problem, the better, because we stop digging ourselves deeper into the hole. But the sooner we address the problems, the sooner we have to come to terms of reality. And we have to see a very, very big drop in our standard of living. And, Americans are not going to like that. Nobody likes that. And politicians don't want that. Trump promised everything was going to be great, right? If he was president, we'd win so much, we'd be tired of losing. Well, tired of winning. We'd want to lose, right? We'd be so bored of winning all the time. So Trump doesn't want to preside over a major decline in our standard of living, but ultimately that has to happen because this is the consequence of all the excess consumption that went on before he was president. We sacrificed our future to indulge our past, and the future is now the present. We're here, and it's time to pay the piper.
All right, Peter Schiff of Euro Pacific Capital. Peter, always great to have you on the show. Thank you so much for your time.
All right, thank you. Don't forget, listen to my podcasts at schiffradio.com or on my